Join me as I rank all the stocks in my 200k stock portfolio, from the worst to the best. I'll also be ranking 16 other popular stocks as well, and I'll give you my take on why some of these stocks may be more attractive than others to invest in. And if you'd like a deep dive into some of these companies or would like an overview of my portfolio, feel free to check out my channel as well. Now, to rank all of these 29 stocks in total, I'm using this popular tiering system. At the top we have the S, that's the highest quality of stocks. And then below we have the F, right? That's the lowest quality of stocks that we would like to stay away from. Okay, so yeah, time is money. Let's start off with my smallest position currently, which is Texas Roadhouse. And Texas Roadhouse is one of those restaurant stocks that I own alongside Chipotle Mexican Grill. Since I invested in this company, I think the stock is up roughly 130%, and the valuation has also expanded in that same time period. And that's also why this is my smallest position right now. I've taken home a few of the gains right I have in the stock. So in that sense, I would give this a B tiering, right? It's an amazing company, but the valuation isn't that attractive anymore, right? So moving on to one of my latest additions in my portfolio that I'm super excited about, and that's Uber. I made a video a few weeks ago, I think, about why it's my top stock pick for 2025. The key takeaway is that the company is becoming finally profitable. Now, with that said, I would also place Uber on a B rating, right? It's an amazing company that is becoming profitable, but today it's not that profitable yet, right? That's the whole investment thesis, that hopefully in the coming years, this company will move up to an A or an S rating. So moving on to one of my favorite businesses or stocks in the entire market, which is called S&P Global. They do, as many of you already know, credit ratings, right, for institutional investors or for companies. And they also maintain and manage the famous S&P 500 and Dow Jones indices as well. This company has fantastic margins. They totally dominate their market as well. And they're still growing at roughly 10% per year, which is, I think, still quite healthy at this scale. And this is, of course, an S rating without any question. So the fourth stock I'm going to rank is called Chipotle, and that's another restaurant stock that many of you, especially if you're living in the US, already know about. It's a fast casual food chain from the US focused on Mexican food. And like Texas Roadhouse, it has an amazing business model. The question then again has to do with the valuation. Having said that, I would actually place Chipotle on a C grade. I think they have much tougher headwinds in terms of margins than other restaurant brands, as they've been so aggressive raising prices over the past few years. Now, a company that has no issues raising prices and keeping its amazing EBITDA margin of 55 to 60% is called MSCI. And just like S&P Global, they work in the ETF and in the index business. They own and maintain the MSCI World Index, for instance, as well. They're also heavily within financial analytics and ESG. ESG is taking a back seat, at least in the US. It would be on an S tier normally, right? But currently in this environment, I would actually take it down to an A tier instead. Now, the fifth company is called Take-Two Interactive. They are the owner of Rockstar Games, and that gaming studio produces Grand Theft Auto, which is soon coming with its 6th iteration. The only issue with this company is that the revenues are not that consistent, right? It's heavily dependent on individual gaming releases. Now, with that said, I think there's a bright future for this company in terms of profitability. I'll place it at a B rating as well. Okay, moving along to another exciting company called Ferrari. This is by far the best automotive stock in the world, in my opinion. But the valuation suggests to me that the company is quite fairly valued. It's not really that undervalued anymore. However, given the amazing market position and the brand, right, that's what you're really investing in, the strong Ferrari brand that will live on for decades to come, I would still place it at an A rating today. So the next stock is also a consumer stock, and it's called On Running. It's a new Swiss brand, or fairly new Swiss brand, that is competing head to head with Adidas and Nike, and they are taking massive market share. But the valuation is a headwind. This company is really heavily valued. I would place it at the C tier right now, besides Chipotle. Moving along to an exciting stock that is focused on the Latin American market called MercadoLibre. They are a blend of Amazon and PayPal, and it's still quite below my fair value estimate. I have a separate video on MercadoLibre. This is a clear S rating for me currently. Now, the next stock is a bit more traditional. It's called Universal Music Group. They are the largest label in the world with a roughly 30% market share of all global recorded music. Once a song is recorded by the Beatles or by Taylor Swift or by Drake or whoever they have in their catalog, they can monetize that song for decades to come without barely any additional cost. The issue here is that the company is listed in Amsterdam, and the issue there is that the valuation and the multiple it receives is much lower than if it would have been listed in the New York Stock Exchange or in Nasdaq. I would currently place it at an A rating. If it would have been listed in the Nasdaq or the New York Stock Exchange, this would be a clear S rating today. Right, so the next stock is called Hermès, and that is a French luxury brand that many of you may have heard of. They, for instance, own the famous Birkin bags or the Kelly bags, and if you have a girlfriend or a wife, I am sure that they know of that brand. My girlfriend certainly reminds me every day how important it is that I someday buy her a Birkin. We will see about that. And to me, this is by far the best luxury stock in the world. It's much better than LVMH because they don't have wine and spirits as a big chunk of their revenue. That's decelerating, and they're keeping their margins fantastically high. Now, with all of that said, I'll bring it as an A rating today. It would have been an S rating if the valuation would have been just a bit lower. Okay, so the next stock is called Microsoft. This is one of my largest positions, roughly 7% of my portfolio, and I suspect many of you listening to this also own it individually as a stock that has amazingly diversified revenues, and they have a solid foundation within AI. Despite the valuation, the company is still slightly undervalued, but the business model is so attractive, I can't give it anything else than an S rating today. Now, the final stock that's within my portfolio is called Investor AB, and that is the largest stock position right now for me. This is a Swedish-based investment company that has a diversified portfolio of global large cap companies beneath them. And to me, this is another S rating. If you have the possibility to invest in this stock, then I would highly recommend that you look into it further. Okay, so moving along to the popular stocks that I expect many of you, if not all of you, own in some way or form, right? And let's start off with Nvidia. And they have done so well so far in monetizing the boom in AI, for instance, that the stock has gone up quite a lot in the past few years. Now, here again, we have an amazing company with an amazing business model, but the valuation is rich, right? Especially considering the risks that AI models in the future may require much less power, as we saw with the DeepSeek AI, right, that came out of China. So with that said, I would place Nvidia at the B rating right now. Now, the second of the popular stocks is Apple, and in my opinion, Apple is the strongest brand that has ever been created. However, this is reflected also in the valuation. The company is barely growing anymore, at single digits at best each year, right? So with that said, I would also place it here below at the C rating. Okay, so moving along to Amazon, here we have some more growth than Apple, right? And we have a valuation that kind of matches that as well. I think with Amazon though, there are a few levers that are more exciting to look forward to, right? We have AWS, a lot in terms of advertising revenue as well. So with that said, I would actually place it at an A tier. I think this is one of the more exciting investments within the large cap US tech space. And I would say kind of the same thing for Google as well, right? It's still growing at roughly 10% or higher per year, right? And in this case, the valuation actually matches it. The question is, what will happen with search in the future? I think that is much more unclear. But as the valuation is so low right now, I would also place it at an A rating right now. Okay, so moving along to Meta, this was a stock that was an amazing buy a few years ago when the stock got crushed in the market, and today it's quite close to its all-time highs. And so has the valuation, right? The multiple has expanded quite a lot. So with that said, I would place Meta at B tier right now, as I'm not seeing the type of future revenue growth as I could imagine myself for Amazon or Google. Now, the next company is called Berkshire Hathaway. It's of course the company of Warren Buffett. I think this is an amazing company given the valuation and given the track record, right? This is to me a clear S tier. And now we have perhaps the most controversial of them all, which is Tesla, right? I think it's a great company. They're making amazing things. If you believe in them, I think this is a much higher rated company than a D tier. But to me personally, my own investment philosophy, this is just a valuation that is too high. And now we have a bank stock, which is called JPMorgan Chase. It's the largest bank in the US. And to me, I would never buy a bank stock. To me, they are too cyclical, right? Often they underperform during recessions and they don't really overperform when the economy is booming. So for me personally, I would rate it as a D tier. I think there are other bank stocks in Europe, for instance, that are much more attractive to invest in. And the next stock is called Visa. This is of course a transaction processing company. They run basically a monopoly alongside MasterCard in terms of transaction processing. This is one of the best business models that has ever been created, and that is also reflected in the stock. It's an amazing long-term performer, and that is also unfortunately reflected in the valuation. I'll give it a A tier. And now we have the only pharmaceutical company on the list, that is Novo Nordisk, and that's the company behind the weight loss drug called Ozempic. And this was a market darling just a few years ago. Since then, the stock has gone down 60% as they find the competition from Eli Lilly and other companies to really eat into their future revenue forecast. And with that said, I would place it at a D tier as well currently. The next stock is of course Netflix, and this is really interesting. I personally work within commercial strategy for one of their European competitors, and I know personally how well they dominate their market. They get the best pricing right, and for many they have also the best content as well. Although it's a top tier company, I would place it currently at the B rating given the valuation. And now we have one of my favorite companies in the world, which is Costco Wholesale. They recently opened their first store in Sweden, and I've been going there quite a lot, right? But the valuation is just too darn high. It has a PE of roughly 55 or 60, right? Which is just too high for a company that's growing at 5, 6, 7% per year. So with that said, the business model is an S rating, but the valuation takes the company all the way down to an E rating today. And the next stock is called Coca-Cola. This is a company that is not really growing that much currently, but at least it's outperforming its peers, right? If you compare Coca-Cola to PepsiCo, it has a much stronger stock performance. So with that said, I would place it as well here. Besides Costco, compared to other companies, this is a much less attractive investment opportunity. And now we have the final three stocks. Alibaba is of course this giant Chinese company, and the issue here is that it's operating in China, right, with high political instability. You never know what part of the company can be controlled by the government or by investors. So with that said, I'm placing it below here at an E rating currently. And now we have ASML, which totally dominates the markets in EUV lithography. They produce these massive machines that make it possible for Nvidia and other companies to produce their semiconductors. I think the valuation of this company is really attractive. I'm releasing my full valuation next week, and it has a dominant market position. To me, this is currently a clear S rating as a company. And finally, we have one of the most popular stocks in the market right now called Palantir. And now this is a AI company. I've done a video on them. It's an amazing company that's really realizing the power of AI. But given the high valuation, right, I would place the company at C tier today. Right, so we reached the end of the video. Thank you so much for watching. If you found it informative, please feel free to like and subscribe. And if you'd like to see the in-depth analysis I have of some of these companies, you can go to my channel and you'll find the videos quite easily. So yeah, I'll see you in the next one.